Hi there. In this explainer video, we're going to answer the frequently asked question of, can I work on my IRA, Roth IRA, SEP IRA, 401k, or other retirement plan owned properties? The rule of thumb that is used is it's okay to do the desk work, but you shouldn't be doing the physical sweat equity. Now, we're going to describe this in more detail so you can understand from a tax code perspective, from a law perspective, what this means in the context of owning rental properties or possibly doing a fix and flip transaction with your retirement plan. So first, let's go to the tax code 4975. Internal Revenue Code 4975 outlines who disqualified persons are to your IRA. Disqualified persons would include yourself to your IRA, your spouse, your children and grandchildren, so lineal descendants, and then lineal ascendants, parents and grandparents. And then, of course, any business that you own and operate. And there are more clearly defined guidelines, but for all intents and purposes, your real estate property management company that you own and operate, your real estate company, your real estate development company, those are being considered disqualified persons, just like you are a disqualified person to your IRA. And you cannot transact between your IRA and a disqualified person. That's considered a prohibited transaction. If you engage in a prohibited transaction, your IRA will cease to exist January 1 in the year in which that transaction occurred. In addition to taxes on the distribution, you would also have a 10% premature withdrawal penalty if you're under 59.5, and there could also be a 20% accuracy related penalty. So you want to, of course, avoid these types of transactions. Now, as it relates to doing work on your IRA owned properties, under 4975, it clearly states that a disqualified person cannot furnish goods, services, or facilities between the plan and a disqualified person. So to understand why you can't do the physical work, you go directly to the tax code. It says you can't provide services. Now, services could be broadly interpreted. Could services mean changing a light bulb, mowing the lawn, changing cabinetry? Yes, it could certainly mean that. In terms of property management, desk work, could that be considered a service? Well, not necessarily something that we can say yes or no to. So what investors have been doing over the years in terms of managing or overseeing their IRA-owned rental properties and IRA fix and flip transactions is sticking strictly to the desk duties and staying completely away from the physical sweat equity. Now let's drill down just a little bit further on the physical sweat equity. There is a possibility that it wouldn't be considered a prohibited transaction, but it could be considered an excess contribution made to your IRA. See, IRAs have contribution limits every year. At the time of this recording, you can contribute up to $6,000 to an IRA when you're under the age of 50, and then up to $7,000 when you're 50 and over. So let's say you put in extensive labor on an IRA owned rental property to make improvements, and let's say it came out to be about $10,000. So if you paid someone to do the work, you would have paid them $10,000. Instead, you did the work. And so you could argue that you made a $10,000 contribution to your IRA, which, depending on your age, would be between $3,000 to $4,000 in excess contributions, which has, of course, penalties associated with it. So worst case is it's a prohibited transaction. In this instance, as we described, it could be considered an excess contribution. So again, rule of thumb, stay away from the physical work and just stick to the desk duties. I oftentimes get the question, John, can I manage a property owned in my IRA? Well, in terms of what you're doing as a property manager is going to determine whether you can or can't. So if you're saying I'm managing a property and I'm going to be there sweeping the floors and changing light bulbs, yes, that's likely going to be an issue. If you're overseeing the project from an administrative perspective, okay, that's likely okay, but it's still in the gray area. You're not going to be able to hear from a custodian like Equity Trust, yes or no. What we can say is that for many, many years, investors have been managing rental properties in their IRA, but again, they create layers of, if you will, distance from those assets, sticking strictly to the administrative duties. If you're someone that is very concerned with respect to prohibited transactions, you likely are going to want to hire a property management company that can collect all rents, deal with the tenants, deal with contractors, and then send your IRA a check for the net proceeds on a monthly or quarterly basis. Some investors would prefer to manage a property themselves once they get started, once they do their first investment. And as they grow and they have more rental property and they have a larger portfolio value, at that point, they might decide, okay, it's time for us to hire a property management company. So again, much of this is not an absolute yes or no answer. There are some gray areas that you have to understand there with respect to furnishing of goods, services, and facilities between the plan and a disqualified person. Now, keep in mind that paying others to do the work for you, from many of the investors that I've worked with, their perspective, it makes sense because of the tax advantages associated with the self-directed IRA. So for example, if you bought a rental for, let's say, $100,000 with your Roth IRA, let's use that example, and you're renting it out for, let's say, a gross rent of $12,000 a year, and let's say your net operating income is $4,000. So that $4,000 flowing back into your Roth IRA is tax-free, because a Roth IRA is tax-free, of course. And then let's say you sell that property 2 years later for $150,000. You make a $50,000 capital gain. That capital gain goes directly back into your Roth IRA, and it's tax-free. So you don't pay long-term capital gains tax. So yes, you're going to you may have a larger, if you will, cost associated with managing the property or rehabbing the property, but you have to look at the economics and the financials of what is the tax-free or tax-deferred upside on the transaction. For many investors that I have worked with, they see the advantages of paying others to do that work for them. And then from there, they're recognizing the benefit on the tax advantages and the tax savings associated with the IRA, Roth IRA, SEP IRA, 401k, or other retirement plan. I hope you enjoyed this short explainer video on can you work on IRA and 401k other retirement plan properties yourself. Until the next explainer video, keep leveraging compounding interest in the absence of taxation.